Hello, everybody. It is great to be here. One more exciting time. And my name is Gary Fowler, and I'm the host today of VCTV. We're going to be talking about the successes and failures of funding. My name is Gary Fowler, as I said. I'm a serial entrepreneur and investor. I've done 17 startups and involved in two unicorns. I was on the original management team of Click Software, which was sold to Salesforce for 1.35 billion, and also even.ai. I'm the CEO, co-founder, and president of GSD Get Shit Done Venture Studios, a premier AI and quantum venture studio located in Silicon Valley. So it is great to have some familiar faces and friends, Jason, Jose, Tobias here today. And today we're going to talk about successes and failures. So, Jason, tell us a little bit about yourself.
Great. Well, happy to be here. Thanks, Gary. My name is Jason Jacobson. I've been active in the entrepreneurial and investment community for over 20 years in the Chicago area and the Midwest in the U.S. I currently am the managing partner of Fountain Ventures. We are a seed stage venture capital fund focused on investing in B2B tech-enabled businesses located throughout the Midwest region of the U.S. We are one of the first VCs typically to come into a round. We can lead the round, we can professionalize the round, but we feel there's a funding gap at the earliest stages. So we'll come in at our early seed and pre-seed is our sweet spot. I also run the Founder Institute chapter in Chicago. I've been doing that for the last 10 years. We help people launch tech businesses through a structured program with mentors, accountability, and a curriculum. And I do various other things, but I'll stop at that and let other people introduce themselves. But thanks again, Gary, for having me.
Yeah, thanks, Jason. Jose, tell us a little bit about yourself.
Hi, Gary. My name is Jose Grasa. Thank you for having me on your show. Basically, they call me the business master chef. I'm the guy behind the Cookie Business Training Program and the BizMoney technology, and also the business simulator. So I've been around for quite a while, like 30 years in business development, but also in setting up startups. Have been a business angel for, I don't know, like 20 years or more, and 3 years as a VC, and that's basically my track record. Thank you, Gary.
So you've seen a few things over the last 30 years.
Yes, quite a lot.
Super. Tobias, a little bit about yourself.
Thank you, Gary, for having me on the show today. Always a pleasure being here. I myself come from investment banking background, went into sort of the tech side, but more from an operator side. Raised around the capital with a startup, venture and accelerator, and then actually switched back to the investment side, but more from a VC perspective. And since 2 years, me and my two partners, we're building Blockchain Founders Fund, an early stage investor in the blockchain emerging technology space, backed 60 companies over the last 2.5 years, and are now currently closing and finishing the close of a $75 million fund out of Singapore. We're going to do a lot more investments over the next couple of years. And been very active and trying to be very active in the entrepreneurship space in general. So yeah, pleasure to have me and talk about fundraising success and failures.
So let's talk about it. So Jason, when we talk about successes of fundraising, I always like to start off with the positive. What are some of the, how does a startup go about it? What is a success? How do you deem, of course, we can say we have a unicorn that's had a successful exit. That's going to be a success because the funding would have paid off. But what is it exactly? What would you determine from Propellant Ventures standpoint, your standpoint? What is a success?
Well, there are a lot of factors, and some people, have different views of it. But I would say, well, first of all, obviously, raising the capital is the obvious one, but there's obviously many things that you want to have in place before that. So I'll mention a few. One is you want to make sure that you target the right investor. So do your homework, do your research, get an introduction, make sure that investor, whether it's an angel or a VC, looks at deals at your stage, your geography, your industry. So make sure there's good match. And there's a lot of online ways to connect with investors these days where you can have a match, but make sure you have the right match. That way you're not wasting anyone's time. But even before that, you want to have certain milestones in place that you highlight, whether it's revenue, whether it's users, product built, partnerships. So you want to have as much of that in place as possible before you seriously talk to professional investors or outside your friends and family. The more traction, the more momentum you have, the better it's going to be for everyone, the more excited people will have about your business. So bootstrap as much as you can, build something that shows some product market fit, and then you'll get people more interested. And there's different stages, of course, whether it's friends and family, angels, VCs, but make sure that you're talking to people at the right stage as well.
No, it's fantastic. I love what you said about find the right match, because been down that road a number of different times. But Jose, what is the right match? So you look at it. So you're going out to raise money. A startup's out there. What are the elements of the right kind of match in terms of an investor? So what do you think would be the keys to the success of that relationship? So is it the personality? Is it the fund size? Is it the ability to be able to advise? I mean, what is a success of a relationship, of a successful relationship?
Well, Gary, I like in particular this question that you are placing, especially because we have in the training program of the business, we have quite a big chapter related on fundraising, and also we have some experts that are really fundraisers, professional fundraisers that have been in this industry now for a very long time. In that sense, it comes to relationship building. So even if you have the perfect match and you go out and you check the track record of this investor, and he likes to invest in the type of venture that you have, it still comes up to you need to be at the stage that he likes to invest in, and definitely build up that relationship. He might not even like you in the first meeting, so it can happen. So it takes some time to build that relationship. That's why it's also much easier to raise funds from friends, and family. And what we tell people is just build up your business. Try to come up with something that works out. It doesn't need to be unique, by the way. Everybody thinks it needs to be unique, but it's not the case. It needs to be a good business model that is generating some nice revenues and that you are generating some profits. And then you probably are at the right moment to track down an investor that likes that type of business activity that you are doing. And then once that is the case, then you need to think that it takes some time to build that relationship. And that's why fundraising in normally takes a long time. Even if you do the pitch and you send out those emails, we have a bunch of meetings. It doesn't work out from one day to the other. I have done fundraising myself. I've been on both sides of the table as an investor and as a fundraiser. And I can tell you that the longest that I had one time fundraising, it took me 2 years with one investor. It was a very long roadmap. Okay, but eventually we got quite a big sum of money from this investor. Sometimes they also want to see what you're capable of doing. So it's not a linear approach.
Yeah, in Silicon Valley, so with Eva, I raised $7 million in about 4 months. But there was part of the secret to the success. First of all, I had a billionaire partner, so it didn't hurt having somebody that was world renowned with you. That's a good thing. So startups out there, look for somebody that's got name brand recognition. But the other thing that was part of it is that when you have multiple VC funds that are interested in the deal, they start to compete. And all of a sudden the game changes. It's like dating, right? You go out and all of a sudden, the terms change, et cetera, because it's a small community and people talk. So I found that that's really important. And the other things to do, from my perspective, if you've got some type of revenue where they can see that you have product market fit and you're going to be successful, it's a whole lot easier to get them interested in the project. And Tobias, what do you think? I mean, you're an investor, you got the Blockchain Founders Fund. What is it all about? What's a successful relationship for you, and what do you look for in a company you're going to invest in?
Yeah, there's a couple of interesting points you mentioned. I mean, for us, it's a couple of things where we really want to see the coachability of a founder. right? I mean, obviously, the founder has a lot of domain expertise typically, right? Because they spend a lot of time doing exactly what they're building on. So, looking for a VC who gives you domain advice is probably not always going to happen. But what we can do is probably open doors and give different perspectives, right? And then it's always important that the founder follows at least the idea, even though it turns out to be not the best idea. But it's always important about like working with the founder as an investor, trying to use our resources, leverage the resources, and give it him a hand. And then he obviously has to go through the door. But essentially, we're probably like open a little bit or like potentially guide him through the right door. So like the whole coachability, the whole does it work from a personality perspective is for us important just because we work with our founders on a weekly basis and are just quite hands-on and uninvolved, similar to what you, Gary, at GSD is doing. I think many others as well. And I think successful is also, I think, a very important point, especially a lot of early founders. They obviously love it when they can raise a ton of money, right? When a big check is coming in, and that's great. But it's always also important to understand what that means from a responsibility perspective. If you raise a big A round or a big seed round, it's tied to certain milestones, and if you're not able to hit them, you're potentially going to face a down round, or it's just a lot of challenges with your investors moving forward, and that could even be more damaging than raising the money in the first place, because who's gonna give you money again if you hit none of the targets, if you not able to handle the money well, and then in the end, as you said, Gary, the industry is small. So if you burn hands with some investors, it's probably going to spread the word really quickly. So it's about finding that niche of how much money you actually need, and finding the right investor, build that relationship, but also being, as a founder and as a CEO, that coachable, that you listen to others' advices and success stories, and kind of work on this whole project together, because it is not easy being an entrepreneur. It is not easy being an investor, and together, I think that's sort of where I see the future of investing going. Working with the founders, opening doors, and just having a close relationship, similar to a marriage, right? It's a long-term thing in the equity investment space, and I think that's what we need to foster moving forward, both from a founder perspective as well as from an investor perspective.
No, you're right about it in terms of relationship. I know with one of the all the investors that I look at and bring it into the companies, I want to have that long-term relationship, because it's not easy. It's like a roller coaster, up and down. But at the same time, it's exciting. And you're right about the advice. You're looking for investors too, where there's smart money. You don't want to. It's one thing about getting money. People say, "Well, I just got raised funds. I raised it for this high net worth individual who has no experience." And by the way, it can be detrimental. I've seen that too. I've seen these relationships where companies have gotten investment and they brought somebody in with dumb money that didn't have any knowledge of that particular space, and we're starting to try to help them, wanted to manage their business for them essentially, and it ended up creating a whole lot of challenges and problems. So having that in a good sense, that advisor type relationship where you're trying to understand your business, find somebody that's got some domain expertise in your area, that has done it before, that can really help guide you, because you're walking hand in hand through this. Listen, with my company, Eva, which is today $1 billion company, we had to walk hand in hand together to be able to pivot the company 3 times. We were a Google-like search for the personal cloud called Findo. We pivoted to a smart assistant, and then to remote workforce management. I mean, I went through it, and it ain't easy, that's for sure. But at the same time, those are some of the things that you have to do, and conserving cash and being prudent with the money is important, to be able to understand that the money that's coming in, the people are doing you a favor and it's their money. Make sure that you're using it the right way. And you got to sometimes make tough decisions, right? When you're running a company, sometimes you got to let people go, and it's difficult, or reduce salaries, or whatever it takes to help the business to be able to grow. But the great news is that there is an opportunity to do it. There are all those type of investors out there, and this is one of the greatest times in the market that we've ever seen. So what about, Jason, let's talk about failures, right? I know this sucks, but let's talk about what are some of the things that you don't want to have happen, that you've seen happen, that are not, it's not a good relationship, it's not good fundraising, and it's going to ultimately lead to a bad situation for both the investor and the startup.
Yeah, well, one of the first things that comes to mind, and we all talked about relationships. If there's an arrogance about the founder, the CEO, that just doesn't resonate with you. Now, you want founders to be confident and believe in their business, but if there's an arrogance there that just you realize they're not going to be coachable, they're not going to listen. And I'm not saying as an investor you're going to tell the founder what to do, but you get a sense if there's a blocker, if their personality is not going to fit. So that's a big one. I mean, you want to make sure that this is someone you can even have a beer with, someone that you can talk to. But so arrogance is one. Also, the stage, if they're too early for what you like to invest in, again, that goes back to the research. You want to make sure that you understand that you're talking to the right investor for the stage, the industry, the round, whatever it is. If you're not targeting the right investor, that shows that you haven't been doing your homework and you're not doing the right research that you need to do before you talk to people. We have a submission form on our website. We get lots of people that send stuff that does not fit our thesis. To me, it shows they're not reading our website. They're just doing a spray and pray approach, and hopefully someone will, want to talk to them. But if it's not in our thesis, we're not going to talk to the person. So we want you to do your research. So that's one. And then I'd say just be prepared as well. Most entrepreneurs send a deck or send a summary to the investor. Make sure that it's high quality, that there's no spelling mistakes. I've seen that plenty of times. That looks professional. Take the time to put that together, because that is, for many times, the first impression you're going to give to an investor. So make sure that you spend the right amount of time putting a good story together, and that will potentially help you get to the next conversation.
Yeah, so you're right about, the spray and pray approach. People think, well, listen, the more I send this out, the startups, the greater the probability of success. But in reality, what you got to do is target. So here's a point, Jason. What's the best way to get to you? So sending the decks in many times doesn't work because you're inundated with thousands of them. But what's the best way to get to you? If you want somebody to come in, what's like the secret door? So if you want Jason's secret door to come in to get funded, what is it?
It's really relationships. Find someone that knows me that can give a good quality introduction. I mean, that's really, I believe, the best way. That's been that way for many years. I still think that's the best way to get in front of an investor. So find someone that knows me and can put in a good word. So that's how our investments have either come through that way or through personal relationships that I knew the founder already. So that seems to work the best.
So how do they find those relationships? What's the way, so here's a startup coming in. Well, how would they find that person that knows you?
So LinkedIn can be your best friend. LinkedIn is a good way. So hopefully someone I know, and then ask for that introduction or get that information sent to me. Usually you want to ask for permission before you have an introduction. So once you find that person, have the person send it over and say, hey, would you be willing to talk to this investor or this entrepreneur? So LinkedIn is a great way. Go to events where investors are going to be. If they're a featured guest, that's always a great way. Then you can reach out on LinkedIn and say, hey, I saw you here. Could I send you my information? That happens to me quite often. Also with VCTV, we have people follow up with me on LinkedIn, and that's another way. So be where the investor is going to be, if you can find that investor. If not, again, you got to spend a little time finding someone that's connected to that person. And again, LinkedIn is a great way to do that.
Yeah, no, I agree with you 100%. I mean, but that's all about sales, right? So
Yeah.
Somebody that's good in sales knows how to relationship map. In fact, a friend of mine wrote a book called Business is a Contact Sport, and he talks about that. So, you're right on. So Jose, to get to you, what's the best way for those startups to get to you that you're going to say, I'm really interested in this relationship and I want to work with you? So, as the business master chef, what kind of stew are we going to cook, and what's the best way to make it incredible?
I think I'm a little bit of an exception in the whole setup, so everybody can contact me. There's no limits on it, so you just ask for a connection on LinkedIn and send that deck. And if it's not something that we are interested in, then we will try to find somebody else for you. Sometimes it can go to an introduction, or in other cases, we just tell you, look, this would be a guy that probably would be interested in this type of venture. We typically are more interested in, I would say, even before seed. We come into the very, very, very early stage, okay, of everything. That's our focus, and we try to bring these gentlemen to a stage that they either can move on by themselves, or they can just go out and raise funds because they become venture worthy. So we are, I would say, in the opposite side of what normally investors would like to invest in. I think the biggest mistakes they can make is go out and shopping. You heard this a lot of times. Just take a email list and start sending, to all the investors that to all their emails, and go on LinkedIn, take the sales navigator, okay, and start, pushing out those emails. That's definitely not the way to go. You really need to figure out if that's the right target. Personally, I think the investment industry needs some kind of an upgrade. I'm sorry to say this, but it's a very disadvantaged setup for founders that are approaching the investment community. But it's understandable that you have so many millions of people. The competition is tremendous, and so many few people really capable of investing, that they get overwhelmed. So we also need to understand that point. But that's what I would say. I'm open. You can contact me anytime. There is no limits on this, and we're here to help you.
Yeah, we use our accelerator to be able to define and understand the key components of that startup and how investable they are. We assume coming into the program that they're investable, but we really define, what track they're going to be on, and then rate them accordingly and what kind of things that they need to have in order to be investable. So there's one thing about a company, it's not a binary decision, is it, Jose? It's really, you got to look at the company in general, what the opportunity is. We look at if they can go global, and at the same time, search for those companies in areas other people don't search for them. So it's a credible market today, right? It's changed in the last 3 years now with this digital transformation. Look at it. Here we are on StreamYard around the world. I'm in Washington. I didn't even know, Jose, you in Portugal today? It's hard to say. Chicago.
I'm back to Poland right now.
Okay, so, we're all over. Tobias, I don't know where you are today either, but here we are.
Singapore.
Where are you?
Singapore.
Okay. So here we are all over the planet Earth. So we can connect the dots here. And it's so optimized. At the same time, that's another challenge, right? Isn't it, Jose? How does somebody get your attention, Tobias? What's the best way for those startups to get your attention? Now, there's one thing that we talked about coming into you through people but let's assume that you know the person. What happens on that first call with the startup? What are you doing? Are you on Googling their name, or are you looking in LinkedIn? What do you do when you do that first call? How do they show you their credibility?
Yeah, I think it's a very good question. So there's a couple of areas I look at. So for me, it's not as relevant if it comes from someone who referred the company to. I mean, of course, it's great because I'm going to have a look at it because it reaches my desk like immediately, but it doesn't give the company a lot more credibility just because someone referred the company I know. I still want to do my own research and understand sort of what problem they're solving. So I try to be very objective about that. What I do is, of course, I do a lot of background checks on the founders. Right? I want to see sort of what was their domain expertise. Do they understand the space they're in? Why are they in? And also a couple of usually the first questions I ask, I just want to understand sort of, okay, you worked 7 years at Morgan Stanley, for example. Why are you doing this to yourself now? Why you want to be an entrepreneur? Or are you going back to Morgan Stanley if the startup fails in 2 months, right? I want to understand sort of what's the bigger vision. Are they fully committed? Are they going to stay if it's going to be a bit difficult? Obviously, I want to understand the market, right? If it's not something I'm extremely familiar in the beginning, then I do a little bit of background on the market. I want to understand sort of what the players in. I look at the pitch deck, obviously, and I just want to be prepared. Right? I'm never going to be as knowledgeable as the founder on the first call, not even on the second call, not on the third call. But I don't think I need to be. I just need to ask the right questions and understand sort of where they're coming from and where they want to go. And if that's something we can support from our resources, but also is that something we want to support because we see it just fits in our investment thesis, coming back to that point. Because also not every introduction hitting my desk is the perfect fit just because it comes from someone who I sort of know who has some sort of relationship over me on LinkedIn, right, or over email. So it's really about understanding what they're doing, and I want to see the vision. I want to see what the founder likes about the business and why he wants to do this for the next 6, 7, 8 years, and goes down this very difficult road of being a founder, right, which is obviously not the easiest journey. But in general, we also do a ton of outreach, right? It's not just, I use a lot of data and data mining to understand which companies out there before they have approached someone else might be a good fit for us, right? If they, for example, if they mention stealth founder and the guy has worked for Coinbase before, we will target him, right? We will scrape his profile and see if that's a good fit. And then we also do a lot of outreach from the fund side, because typically also when they reach our network and get referred through a different venture capital fund, then they are mostly a little bit late, right? And they're mostly approaching like the seed stage, because that's when they hit the investor network. I like to source more from founder circles. I'm active on like Telegram, Discord. I join all these things to be where the founder are, and I also take calls with someone who might not be fully ready yet for a fundraise, but just again for building that relationship and understanding if that's something we can help drive or we can help sort of support moving forward.
Yeah, no, I agree with you 100%. I mean, one of the things that you can't really compete with the big folks out there, right? It's tough, and there's a lot of competition. So I remember one time there's a company called Sun Microsystems many years ago, and I met with the founder about 3.5 years ago. Scott McNeely. I had lunch with him, and in 1992, 91, so it dates me a bit. I remember Scott telling me, always go to areas that you fear the most. You'll have the most success. And I'll never forget that. And of course, Sun became a legend, got acquired by Oracle, but it was really at the top of the game for a long time, and Scott ran it. And I remember, look for companies in places other people don't. We spend a lot of time in Africa, all through the continent. Ghana, Zambia, Nigeria, Kenya. There's so many opportunities. There are 1.3 billion people. Go to India, go to places and find those companies before other people do, and curate those relationships. You got to reach out, and you're right. It's about a hand-in-hand friendly relationship. You've got to have those introductions. You've got to have the right stuff out there so that you have the credibility for them and they have the credibility you. By the way, startups that are listening today, make sure you write. Having articles out there on the internet, winning awards where it establishes your credibility is really important. Update your LinkedIn profile so it reflects it accordingly. Make sure your Facebook page does not have a lot of BS on it so that it looks like you're just into racing cars or partying. Make sure that you have the right stuff, because people are going to look at it. They want to know who you are, what kind of person you are, whether they can trust you or not. Trust is really important, because it's well said and done. It's just like we've all said today, is that it is a marriage, it is a long-term relationship. And the last thing you want to have is a divorce. So what you want to do is curate and culture that relationship, because it's not going to be easy for anybody. But at the same time, you've got to look at it as the opportunity and reflect on the positive sides on it. So Jason, if somebody comes out today, well, if you could take 3 words of wisdom, right? 3 pieces that startup needs to have right now, what would you say in order to be successful right now?
Well, perseverance is important. Don't give up. A lot of entrepreneurs have been very successful during this pandemic where they have to change their business model, go after a new market, whatever it is. But perseverance, it's, as you mentioned earlier, Gary, the ups and downs. You've got to be able to get through all that. So perseverance is important. Have passion, really love what you do, love what the problem you're trying to solve. That comes through to the investors. So we want to make sure that you're all in. And I would say resourcefulness, build a good team around you, find ways to be successful. You're going to be bootstrapping early on. You're not going to have a lot of capital, but find ways to generate revenue, find ways to build a good team around you, even if it's not full time. But that's something we look for as well, is just how resourceful you have been as an entrepreneur at the early stages.
No, I agree. I mean, perseverance is one side of it. The other thing is, listen, it ain't easy. So you got to have partners out there and you got to support each other. There's sometimes you have down days or things aren't moving in the right direction. Look at the positive. Remember the Pygmalion effect, the self-fulfilling prophecy. So go down through and paint the positive picture. Listen, we all go down through and we have to pivot in our lives. It's not a bad thing. It is not failure. Listen, if you're going down the road and you make a U-turn to go in the other direction, that's not failure. It's adaptation. It's resilience. It's perseverance. Do that. So you're right on about it. And Jose, from your perspective, top three, what are the top three characteristics of that successful entrepreneur and that successful relationship that you need to have?
Well, in my point of view, you can resume it to 3 points. Definitely team. Without the proper team, you will not get there. Even with a lot of cash, forget it. Then the second point would be venture fit, which also is correlated with market fit. So if it's not market fit, not going forward. And if you're not at the right point, that you're not venture fit, then those funds will not come in. Simple as that. And then at the end is relationships. So I would go for those three, and if you do those three properly, then you get the job done.
Okay, so let's talk about the team. So you're out there looking at a company. What is the kind of team that you say can be successful? What does it look like?
Okay, so I've been a team builder now for many times, okay, and many years. Right, I've been selecting people myself and improving the quality of teams. The first team you're going to select probably is for sure not the ideal team. And some people will be more resilient, others will be less, others will be more brilliant, others will be less. But what you need to understand is that probably the first team you're going to kick off is not the team that is going to make it happen. And during this process, okay, you're going to improve this team and scale up the team with an X amount of talented people that have those ingredients that the previous team had on default. And eventually, after an X amount of turnarounds, you get a real good team. So when I look at a team, the first thing I do is I say, okay, do these gentlemen have these ingredients that are going to make this business a success? Yes or no? You can even be a brilliant guy, but if you don't have the right DNA for this type of business, there is no way you're going to make it happen. So that's the way you should look at it. And those teams, they're never fit. If I see a very young team with not very mixed, with some people that are really experienced, and if I talk to these gentlemen and they are, and I think Jason made a very good point, they're not flexible enough to listen, then it's not going to happen.
Yeah, no, I agree 100%. I mean, I wrote an article about the threes of the what I believe are the right things, and we say intergenerational teams, where you've got the people with the gray hair, the advisors, the trusted advisors. And I heard it again last night in Washington at here. We were talking about these, scores, the retired executive, but it's really getting them engaged because they have those contacts we talked about. So those contacts that come in, if somebody's trusted, they're from Chicago and they've got some name brand recognition, like the Pritzker family, you're going to listen if somebody refers a deal, right? So look at those types of folks. We look at cultural diversity, multicultural, because if you want to really have a solid, strong company, you need to have a lot of different viewpoints in it. And the third pillar is decentralized. By that, I mean having those teams where you're doing the research, the R&D work in places where it's economically feasible and they have the talent sets. So when you start to build it up, at least from our perspective, those are components. And you're right about the team. I mean, talk about it, Tobias, from your standpoint. How important is it? So if you look at a team, what are the characteristics of the CEO and the COO of the company? What are you looking for, and what kind of relationships do they have with each other? And how would you say that's a great company to invest in because of the team?
Yeah, I think especially in startup, you're a CEO very fast, right? It doesn't necessarily mean that you are a great CEO, right? And I think here it's especially important to really understand, first of all, what is the expertise of that person? Does it fit with the current venture, what the person is doing? And then more from a personal perspective, I think it's really important that, again, everything is on eye level, right? And especially in a startup, you wear a million different hats in the beginning, right? You're not just the CEO, and the other person is not just the CFO or like the CMO, right? Everybody's going to do everything sort of together, unless until you hit a certain head count and everybody pivots more into a certain direction. And I think it's you shouldn't be too good to do a certain task, even as a CEO, right? If you need to print something as a CEO, if you need to write 1 million emails every day, if you need to go out and do stuff which the intern in a previous company has been doing, like there shouldn't be a problem, right? You need to go through everything to also understand, right? And I think that's a really good quality for me as a leader, is that you're never too good for a certain task, right? And you even have to step down and be close to the customer. I think, give you an interesting example. What I love, for example, is Grab, which is similar to Uber here in Grab Food. The CEO, every month, he goes out and delivers food himself because he wants to understand how good the process for customers and his food delivery guys in reality is, right? And you want to have a CEO who's doing this on a consistent basis, who keeps that connection to everyone within the company, but also to customers, and develops that product and the customer together with the team, regardless what a title, what his previous experiences does. Because in the end, everybody needs to pull on one string together to keep this venture afloat, right? And to keep this venture moving. And in Cambodia, when I lived in Cambodia, there was a really cool company in the fintech space. And I mean, they couldn't pay a salary for a little bit of time, and people were still pushing together, and everybody was doing everything. And that venture pulled through. It was very difficult times for everyone, but no one was too good to do anything and felt too superior to the other person. And then in the end, they kept it together and went through that very difficult time. And that sort of, and it's pretty easy actually to get a gist of how a person thinks about this when you are on a first call with a person, right? Of how I don't want to say arrogant, but it goes in a similar direction. And I think that's for me just tremendously important to have that humanity in a sense, but also domain expertise, and just really being able to pull that off together.
No, you're right about it. The continuous customer development is really important. And I know, that's one of the things that startups need to really focus on, which is to make sure that you have product market fit and the people want to buy what you're selling. As my friend Bob Dorff and Steve Blunt, my friends say, make sure they want to grab it out of your hands. I know with many of my companies, what we do. So for instance, with Eva, my partner and I would actually walk down the street in Palo Alto with our iPhones and a little stand, and we would do a presentation to people on the street and cafes. Now, of course, you'd have a VP of Apple, right? It's in Palo Alto. So it was actually a great place to do customer development. But we would get opinions, and those opinions really helped shape the product. And what I did as the CEO of the company, I would send those interviews over to my staff my engineering folks, so they could understand what the heart and soul of those potential customers is and what kind of tweaks we need to make in order to make it successful. And it's a continual process. It never stops. So your idea, the suggestion that that you go out and talk to your customers, I think that's a great idea, because that's how you stay in touch as a CEO of what's happening, keeping your pulse on the market of what's happening, and to be able to pivot when it's necessary, because it is changing all the time. It's not like it's going to be this way a year from now. It's going to be evolving, and you need to evolve. And so those are some of the characteristics I think Jason said about resilience of a CEO. So Jason, listen, we're coming up to the top of the show. What advice do you have for startups today? Here we are, on one side, we say the pandemic's over. Europe's up in terms of the number of cases. There's some lockdowns happen again. It's up and down different places. How does a company today raise money in this, post or pandemic world today? So what's the way to do it, and what are your suggestions? And let's close out the show. How do people get a hold of you?
Yeah, we're definitely not through this. As you mentioned, Gary, I think we'll be in this up and down for a while. But the great thing is the acceleration and adoption of virtual conversations is here to stay. I believe many people have been doing it for years. I've been doing it for years, but it's finally here for the masses. So you don't have to meet people in person to raise capital. Of course, it's helpful, but you do not have to do that anymore. And so that opens up really the world to you, or at least people not that close to you. Even if you're focused on raising money in your country, you don't have to meet everyone in person. So look for other ways to meet people, whether it's virtual events, virtual conversations like this, but explore that. You don't have to leave your home or your office to meet people anymore. So eventually you want to have a good rapport with someone, but again, you can find people really anywhere at this point. So again, that goes back to being resourceful. Go where the investors are, seek them out, build that relationship. So take advantage of these virtual tools, because there's a lot more ways to meet investors now. For those that want to get a hold of me, LinkedIn's a great way. You can also contact me through our website or email me, jason@propellant.vc. If you do email me or contact me, remind me where you met me so I know the context. Just like Jose, I am open. I do talk to people. So send me. So thank you again for having me.
Yeah, thanks, Jason. Appreciate it. Jose, same question to you.
So my first message on this, I think this is the most important, is because every time I talk with a founder, I always get the answer that, well, you make it so hard. Why is it so hard to raise funds? And in our opinion, it's easy. So what I can tell you is it's not easy. So put it in your brain and get it bootstrapped as much as possible. Do your homework. Try to get it to a point that the investor comes to you, and not you as a founder go to the investor, because that's the ideal position. And if you are fit, you definitely you are able to raise those capitals. So that would be my recommendation: is just stick a little bit longer to your venture, get that roadmap done, get your goal done, and then once you are fit, and you will feel when you are fit, because you can do certain trials along that road. And when you're fit, definitely that cash will come. Go first to friends and family. That's the easiest way to raise the cash. Be respectful with the cash. Don't spend it like hell. Don't spend it on a lot of things. Especially avoid the payroll. I would say in every startup, the biggest tranche of money that somehow gets out and spent is always on the payroll. So cut that off. Spend it on things that is really necessary, and try to get it to the point that people are going to come to you and they want to invest in you. That would be my recommendation. You can find me on LinkedIn, or you can just send an email to hello@bizmoney.com or hello@cookiebusiness.com. And that's how the best way to get in touch with me.
You make great points, Jose, and you're right about it. You have to stay, part of it is staying positive. And, that's what's a law of attraction. People come in when you're positive and you truly believe in it yourself. And that's part of the spirit of being the CEO of a company, is the belief that you can really tackle the job and, more importantly, get the job done. So great point. Tobias, the same for you. Tell us a little bit about it and closing thoughts.
Yeah, absolutely. So I think in the end, it's really a mindset game, right? And I think you have to use all these opportunities we have now. I mean, you can go back to back Zoom calls and do 25 meetings a day if you want with the whole world, with all this amazing features. And I think it's, again, right, I mean, if you look at the pandemic, I agree with Jason, it's probably not going to be over in the next couple of weeks and months. But it's, again, right, I mean, right now it's not the strongest gonna survive. I think it's the most adaptive and the most agile person or the most agile startup is going to be surviving, right? Because you constantly have to pivot, you have to make use of new technology, you have to stay up on the trend. It's moving way faster, and that can be scary. But I think if you use that from a mindset perspective and you stay sort of top of trends, stay close to your customers, build relationships, use LinkedIn, use all these information which are thrown, towards your feet right now. You don't have to go to, a library anymore. You just like open your laptop and everything is there. But obviously use it thoughtful, right? Use it careful, do your homework, and make the best out of that. But I think that's sort of what we're going to see moving forward. How can I be reached? Obviously LinkedIn, just my name. Mention that we met at VCTV, or over my email, toby@blockchain.com, and I'm always happy to reply and look forward to connecting.
No, that's great. And, I feel the same as you do. This is a great time. Startups that are out there, use the tools in front of you, develop an online presence, because people are going to use that for the credibility. Go out, write, speak at events, get you the visibility up, because you want to be looked at as a domain expert, and you want to be that domain expert. These are incredible times where you can really optimize. Tobias said you could do 25 Zoom calls a day. Haven't done 25, but close. It is a time where you can really, it doesn't matter where you are, you can be anywhere. So use those tools, although it does, at the same time, Tobias, you need to, like today I'm in Washington, D.C., meeting with some of the top friends of mine in the Black community here. And that we work together on different projects. And it's good to connect the dots. And it's also good to be with your friends and colleagues and investors on a regular basis, just to keep that relationship going. It's critically important. Stay positive. The self-fulfilling prophecy, as I said, it's important. Attract those types of investors and team members to you. You got to be a bit charismatic to get them to come in. And at the same time, keep your vision. Don't show the weaknesses. Don't talk about the negative stuff. Talk about the positive. As Mother Teresa said, it's not about stopping war. It's about pro-peace. Let's talk about how we can work together. In fact, a couple of weeks ago, by the way, I spoke at the United Nations, and it was really, and listen, if the UN's listening right now, I appreciate the invitation. But they were talking about the negative side. They were talking about AR and VR as a tool to combat violent extremism, terrorism. And they came to me, and I had it. I said, let's talk about technology as a tool for peace. But that's what it's all about. Think differently about this. As Steve Jobs said, move forward. Don't be afraid. Don't sit on your hands. Get out there, and most importantly, get shit done. Talk about it, but get it done. It's about execution. It's about moving forward. It's about getting that startup out there. It's about getting the revenue out. Each one of you that are startups, get off your hands and go out and get the customers. It's not about hiring salespeople. You need to do it, because if you can't do it, you're the wrong person to be leading the company. Get stuff done. So with that, I'd like to say my name is Gary Fowler. I appreciate the chance to host VCTV today. I appreciate the entire VCTV team for making it possible, Hasmek and Company. And stay tuned for another exciting edition of VCTV. And also listen to my Founders Report on VCTV. You'll find it interesting. My name is Gary Fowler, and I've been the host today. Take care of yourself. Stay happy, stay healthy, and most importantly, stay safe.